So welcome. We've got the WE Forum on financial literacy this morning. Thanks for coming. We're glad you're all here. I'm Christine Beach. I'm with St. Mary's University, Minnesota, where I lead the entrepreneurial programming for the university. And each month, along with Amanda Leitner from Collider, and with the support of our partner organizations, which are Collider, the Chamber, Rady, and SCORE, we bring you a panel discussion or a workshop on topic of relevance to women in business. We're hoping to be in person soon, you guys, but in the meantime, we're on Zoom for our April meeting. And our April forum is around designing a business. We'll be using the business model canvas to kind of just walk through what it is when you go ahead and you try to make something new happen, right? Or you want to change how you're doing business. It really just looks at the basic structures about what's involved, what's your value proposition, who are your customers, how are you reaching them, and it kind of walks through that in a kind of canvas that you can erase and redo. So we'll be walking through that in April. I just threw the Eventbrite link in the chat if you want to sign up for that.
Christine, I'm sorry to interrupt, but yeah. I think there's something running in the background of your computer because it looks like everyone is muted, but there's like a video or something running in the background. Did everyone else hear that? There's like a background sound really quiet. Okay. Yes. Thank you.
Yep. All right.
Oh no, I still hear it.
You do.
No, it's gone. Okay.
Okay. All right. So the Eventbrite link for April is in the chat. I think we've gotten through all of the administrivia. So without any further ado, I want to welcome and introduce our panelists. I've asked them each to say a little bit about themselves, but if you missed it, we have Kayla from Lund Tax, Tawanda Burks from, I don't want to mispronounce it, say it, Tawanda.
Elosina.
And then Natalie from Foods Financial. And you have to tell us about the genesis of your name when you introduce yourself. So why don't we, I'll tell you what, Natalie, why don't you kick it off? Tell us, what is Foods Financial? Tell us a little bit about you.
Sure. So hi, everyone. My name is Natalie Slagle. I see a lot of names and faces I recognize. So hello to everyone. It's good to see you. And then nice to meet you to anyone who I haven't met before. So I co-own Fuse Financial Planning with my husband, Dan. We're both certified financial planners, and that comes into play because of the name. So we wanted to create a name that was simple and represented two individual entities coming into one, which is the exact definition of fuse, just two individual things. You think of welding and you have to put it together. Dan and I are a married couple. We're both in finance. And so you'd think our finances would be easy. We'd talk about it easily and we'd have no arguments, but that was not the case. Even though we're experts with it, there's a lot of behavioral and discussions that still need to be had, and we weren't great at it together. And we're like, if we're not good at it, I'm sure couples who have no idea what finances are actually like, how did they handle the conversation? So that's what we wanted to really emphasize with our name, that you're two individual people, you're coming together as one, and let's act like that with our finances as well. But so we attract and we work with the professionals that are in their accumulation years. So we wanted to create a business that attracted a younger demographic, people in their 30s and 40s, compared to when most people actually bring on a financial advisor. So I took up way too much time already, but thank you for having me, and then I'll give it back to Christine.
Okay, not too much time. That's good context. Thank you very much. All right, so let's go over to Tawanda. Just tell us about you and your business and what you do.
Sure, I'm Tawanda Burks. I'm with Elosina, a Minnesota-based corporation that provides advisory, consulting, and business education to aspiring entrepreneurs, small businesses as well. We define and leverage strategic advantages and build solid infrastructures. Yeah.
All right, thank you. You are a woman of few words, so I'm going to get back to you a couple of times, I think. All right, Kayla.
Good morning, everyone. My name is Kayla Scherson, and I own Lund Tax and Accounting here in Rochester. And unlike these two, I did not start this business. I actually purchased this business a year ago in January. So first year of business ownership in the rocky world of COVID and all those things. So it's been quite the ride, but it's been really fun and a lot of things that I've gotten to learn over the years that I've worked in accounting and taxes. But it's just a whole nother ball game when you're the actual business owner. So I'm excited to be a part of this presentation today.
Well, thank you for being here. And I know this is your busy season. So thanks for taking out the time to be with us. So a couple of things that I think you ladies really didn't mention, but I'm going to mention as I kind of look at each of you. Natalie, you've been very connected with Collider and the startup community downtown. Kayla, your business is all women. You have all women who work at your tax business, which is really cool. And Tawanda, you kind of wear a lot of hats in this neighborhood, helping people start businesses. You're actually a full-time student in the doctorate program, and you're at Mayo Clinic doing business as well. So you guys are really kind of modest about your own accomplishments. So anyway, I just thought I'd throw that out there. So I want to kick us off with, tell us what you think the biggest financial issue or challenge you see for entrepreneurs when they first start a business. And Tawanda, I'm going to hand it to you to start us off.
Yeah, for me, with the aspiring entrepreneurs that I have come to me, the biggest issue that I see is that they don't have any experience. They're not sure where to start with financial planning, not sure what's involved. And I always tell people, so when they come to me, they're ready to start their business. But I tell them that they're already behind schedule because they should have sought startup advice prior to being ready to implement and open the doors. A lot of issues that I see with aspiring entrepreneurs is that they don't understand their personal credit, let alone their business credit and what that means and what that is. So a lot of times I do have to defer them back to an accountant or an attorney to know, to talk more about what that looks like. And the reason why I say accountant and an attorney, it gets a little bit deeper besides understanding, what your credit score is. They want to make sure that they're structured correctly, the type of entity that they have, and that their money is flowing to the right accounts. I always tell them it's important to have separate accounts from personal as well as business accounts, even though they could be a single owner. They always tend to mix the two together because they're the owner and they think that, okay, all the money is mine, so I can do as I please, but don't understand that they need to have separate accounts.
And so do you tell them to go back to their personal banker for a business account, or do you suggest they go to a different place?
Sure. A lot of times if they do have a personal banker, I ask them to talk with them, to talk to someone at their bank about business accounts as well, and see what that looks like for them. If they don't want to consider a business bank account, that's fine, but they do need to keep the two finances completely separate so that they can understand where the money is going and where it's coming from.
Yeah, no, that makes sense. So Kayla, I know you're nodding as Tawanda's talking about separating out the accounts. I'm sure you see that as well. What are the big financial issues and challenges you see when people start a business?
Yeah, so I see, two different things. I see people who come to me at the very start and they're like, hey, I'm ready to get started with this business. I have this idea. What do I need to know? And then I have people who come at tax time and they're like, hey, I started this business last year. I did all these things. What do I need? And I'm like, oh, this would have been a great conversation to have a year ago, but okay, let's, peel apart the pieces here. And so, yeah, just that is, and it also depends what type of business you're starting. I think in general, most people, you can just start with, your sole, you can just continue to use your social security number. It would be encouraged to get something like an employer identification number. What type, what are you doing? Do you want the protection that an LLC provides? I'm always very vocal that I cannot give you legal advice, but a lot of times it's very simple to get an LLC. It only costs a couple $100. And so it's just a nice layer of protection there to separate your business from yourself. And then, yeah, separating out the expenses, because all of a sudden they're like, well, here's my what do you need? I'm like, well, what were your expenses? What was your income? And it's all muddied in one personal bank account. And you're trying to figure out, well, you know, was this expense at Target personal or business, and all these different things. And so having separate accounts makes everything so much easier. You know that everything that's in your business account is business related, and it just makes it that much easier to know where your money is going and what money you're making. So those are probably the initial struggles that I see from individuals.
So let's back up a second. You said EIN, in case everybody doesn't know what an EIN is. Do you want to share?
Sure. So it stands for Employer Identification Number. So just like we all have social security numbers that ties a number to, you know, us personally, you have an employer identification number that gets tied to your business name.
Right. And that's something you can get for free, just
Yep.
going online and requesting it. So that's a kind of a nice thing if people don't have one, that they might want to get one
Right.
when they come in.
Yep.
All right. Well, that's a good way for us to get started. Natalie, how about you? What's the biggest issue or challenge you see when you talk to entrepreneurs and they're just starting a business?
I see a lot of people come to us with these amazing ideas, but then actually implementing it and making it real. And I think the first step to doing all that is to getting a deep analysis financially. Your business finances aren't going to be a different reflection than how you control your household finances. You can't expect, if your household finances are out of whack, that your business finances are magically going to be so much better. And so first and foremost, we're like, well, how are things going personally? Because we need to answer the questions on, well, how long can you support yourself with maybe making little to no money from the business? And we won't know those kind of questions without answering personally what's going on and what do you need and how long of a runway are you giving yourself? So that's usually step number one. And Christine, you had shared this fact with us when we had spoken last about it's very little the amount of businesses that actually start up from these major funding or venture capital. I think that's kind of the sexy phrase that we hear about, but realistically, it's on you. You have to save, you have to plan. That is how most businesses, that's how we started our business. And so you have to know, well, what do I need? How long can my runway last me to just keep my household afloat, let alone the business finances as well? So that's the first thing that we talk about and start tackling together.
Yeah, I think that's a really important thing. You know, so what you're referring to is this idea that people kind of, you know, you hear all this talk about people getting, oh, I did seed funding and I got all this money from investors, but that's like, you know, 2% of the population ever gets that. And those are for high growth businesses where you're going to go global on a tech type of basis. Whereas most of us are doing the bootstrapping, right? We're saying, what do we have? What are our friends and family willing to pitch in for? You know, the friends and family are really where we tend to go. And then when we go to a bank the first time, we find out, oh, you know what? The business has no credit, only we do, which kind of circles us back to where Tawanda was at. And we're talking about, you know, you're trying to start a business. And if you go in and say, I want some business credit, they're going to say you've got to personally guarantee it, right? So how do you really start? You started down this road of, you know, your personal finances have to be set for a precursor as a success for business. But Wanda, what are like the first 5 steps that you tell people, okay, we're sitting down, you want to start a business, now let's talk. What do you do?
Yeah, I start with the basics. What does your credit look like? Your personal credit. Get a free annual copy of that. And I don't necessarily go through financial credit with my clients, but I do advise them to pull their reports to see what that looks like and talk to someone that can help them repair if that's needed. One of the next things I do, if they're already in business, but just trying to straighten things out, I tell them to establish trade lines with their creditors. A lot of times they're open to doing so, you know, if they have a long history, and I do advise them to open those trade lines with them so that they can start to build that business credit. And I always tell them, of course, with both personal and business, make sure that you make your payments on time and make them early. But prior to that, if they're still in the startup phase, again, it goes back to pulling a free copy of your credit report. Working through that, getting those things taken care of, trying to get back on track so that you can start to build your business credit as well. And I think that's the most important thing. So a lot of times, if we do have to go down the road with repairing personal credit, it can be very, very time consuming. We all know that some things don't file out credit reports for years. But, as long as, I do preach that as long as they pay them off and continue to maintain on-time payments, that, they'll start to see things turn around. And then we also do a lot of financial planning for the future for the business if, they don't want to take that time to wait for the personal credit to kind of get back in line. That's if they need financing.
So Twanda, you talk about doing planning for the business, and I know, you or I might reside in a world where pro formas are done, and that's just something that we know about. But I don't think a lot of people do. So how do you get them to start thinking in terms of what does it look like to plan financially for the business?
Yeah. So a lot of times, like I said, my clients just come to me with this idea. They have a little bit of money. They think they have enough to start. But then we talk about what the future looks like. Where do you see your business in 6 months? 3 months from now? Can you maintain yourself if you don't get enough customers or clients in to start bringing that income in? So I don't necessarily advise individuals to start if they don't have at least 6 months of income to sustain the company. It just doesn't make sense to me, personally, and as a good business decision to operate without a plan in place, to be able to operate at least 6 months at the minimum, to have that amount of funding available to have your company continue on, as well as your family support to take care of your family.
Yeah. So I hear also this theme of making sure you have enough in the bank before you start. I do know a lot of folks start while they're still doing their day job, right? And some of them that's how they do it. They just run through too. So Kayla, I know you and I have had those conversations. Can you talk a little bit about the biggest challenges you're seeing with people when they're maybe either trying to just do the job and write off losses, and how does that work? Or if they're trying to manage a day job and a side gig?
Yeah, so, and in fact, just recently I've had this conversation with a friend who, she has her day job but it's not fulfilling her. And so she has this dream of what she wants to do. And so we're, trying to lay out, okay, well, what are some different game plans? Just dream up some different scenarios. Like, is it possible for you to go part-time on your day job while you're building this side business that eventually you want to be your full-time thing? If that's not possible, can you get creative in that? Maybe you just totally, can you save enough money personally, just like Tawanda was saying, do you have enough money personally to support yourself that you can just quit that job and build this side business? And what is the overhead? What are the costs to these things? I have a friend who does a business where, she can make, say, $2,500 per project, and it really doesn't take her that much time to do this. And it's really incredible because she can create such a wealth of income with not that much time needed from her. So if she can sneak away in the evening while, husband watches the kids, or she has to bring them all on a Saturday while she's doing something, just dream up some different ways to get creative. But yes, I would say before you maybe fully take the leap, just kind of a general, having at least 6 months of your personal expenses. If you had no income coming in, what would that look like? And could you sustain? Because that would be really the saddest thing, is if you just quit your job, you don't have the money, you're not prepared, and then your other thing isn't taking off like you dreamed. Because a lot of stuff, it takes time to really get moving. You know, people show losses for even the first year or two before they start to really generate a profit. And I know that's kind of a not fun, that's not fun information, right? But that it can be the truth. It doesn't have to be. It's very different for everyone, but just setting yourself up strategically and just being smart, thinking this through. This isn't just a willy-nilly idea of like, hey, I should quit my job today because I have this dream. But just being smart about it, thinking, doing things like this, gathering information, picking people's brain that you know are, you know, maybe in the type of business that you want to pursue. All of those different things are great avenues to learning more.
You know, Kayla, I want to add something here. I find, at least with the clients that I have that come to me, they can have the money saved, they can be ready to go, have a plan in place. But the number one reason I have found that they don't let that 9 to 5 go is the loss of benefits.
Mm.
So that's a whole nother conversation, but that's the main reason I come across with a lot of my clients, that keeps them, you know, trying to balance the two. It's the benefits part of it that's attached to the 9 to 5.
Yeah, that's a huge thing too. And especially if you're a single individual, it's all on you versus if you have a spouse, possibly you can get, you know, benefits from them. Maybe they're not as cost effective or they're not as good. I don't know, Natalie, do you have any input on that?
Yeah, health insurance is a big reason why people don't make the leap. I mean, ultimately, that's like I see a lot of head nods in the audience. Yes, like that was a big thing for us because when we started our business, we both quit our jobs. We had no benefits. And so we had to go down the rabbit hole of all the different options with health insurance. I'm not going to get into that today. I'll put my email in here. You guys will have my contact information, but it is scary. It is so much more expensive if you go out on the private market than most people are able to receive for their employer. When you think about losing, or not losing, but deciding to move away from the pretty W-2 life and go to entrepreneurship, there is a lot that's put on your plate financially that you now have to take charge in. One of them is health insurance. Another one is retirement planning. I would say in general, our entrepreneurs tend to save less for themselves than people who have W-2 jobs. This is a huge part of the planning that we do for our clients. And we say, we know your business is doing great. We know you want to keep putting money into it, but who is going to take care of future you? It's not your employer anymore. It is you. And you have to prioritize not only the health insurance, but saving for retirement, investments. It's a really big part of your personal financial plan. And it is overlooked way too much. I cannot emphasize enough the importance of the responsibility of yourself that you're putting on. But it's something that everyone here can achieve. You just have to prioritize taking care of yourself alongside of your business as well.
Mm-hmm. So I was trying to kind of go through some of these questions that have been popping up in the chat. One of them is around can you speak to the sole proprietor and the benefits of having a debit card for yourself and the business in order to keep those accounts separate for tax purposes, and how the bank might be able to help you keep those records straight, or how to pay yourself, you know, when you're that sole employee. So I think they're kind of talking through some of what you guys have been addressing here. I don't know if there was anything that you've noticed right away, like, is it better for people to get a debit card until they can get a credit card on the business side? What are you seeing? And I'll open that up to anyone.
I can take that. I like doing a debit card. This is what we've done. This is what we're currently doing. It also though depends on what your overhead looks like. If you can afford to not take on credit or not take on debt and can self-fund, then just start with the debit card because it's an immediate reaction to your accounting. Instead of putting all these expenses on a business credit card, then going to a different account and looking at the balance, then looking at, well, what does my bank account say? As simple as you can make it from the start, the better, which is why opening up separate bank accounts is so important. because you want to utilize your bank accounts as quick information. Okay, I know I have this amount for business savings. I know I have this amount in my checking. And as I'm spending on my debit card, my checking account is immediately reflecting that. I think sometimes we get a little excited about the shiny things, but in the beginning, the priority is getting your business up and running. You need to get clients, you need to sell your product, whatever it is. So as simple as you can make everything else in your business world, like finances, the better. But I know that that's not necessarily the case for everyone because of what their overhead and expenses are. And I do want to add, kind of speaking on overhead and expenses, and I know Kayla has a lot to say with this as well. When you do market research and everybody says, okay, interview other people, talk to them about what they've experienced, make sure you talk about their financial journey with their business. How much did they have to save? How much are they making? I know we're in the Midwest, we like to be polite, we don't like to talk about money openly, but if someone is offering to help you, be blunt and say, I really could use your help with knowing financially how your journey has been so that you can better prepare and set expectations on what to expect should you have the same success as whoever you're talking to. But Kayla, I know you had talked about overhead and what you've seen from a tax perspective there.
Yeah, I think overhead can be very overlooked. Sometimes I think people don't think about, paying rent or business insurance or all these different things. They think of, okay, well, maybe I need to buy a computer and I need some paper and I need to, go to join this meeting and it's going to cost X amount of dollars. Or if I'm, selling a product, I need to buy the t-shirt to then, put my design on it and to resell it. Those sorts of things people think about, but it's all the other stuff that can get overlooked. And all of those things really add up. And the more that you grow, the more that overhead can also continue to grow. My business, we just moved into a new location because we needed to expand. I needed more office space. Well, with that comes more dollar signs, right? And so I have to figure out, okay, how do I compensate for now this increase in rent expense, for example? Well, I'm hiring another employee. So that's now I have to pay another employee, but they better be generating the revenue to offset, their wages, their payroll taxes, all of the expenses that relate to that. And so all of those things are important to consider. Yeah.
I agree, including, professional fees, fees for attorneys, fees for your accountant, marketing, all of those things. I don't think a lot of startups think about.
Yeah, I think you guys touched on several things that I think are really relevant to people. This idea of having 6 months of run time being one of them, but that's often, I think people underestimate what that's going to look like because it's the runtime for you personally, but it's also the runtime for your business expenses. And so knowing how to make sure you're covered on both of those, you could end up with a much shorter amount of time if you haven't separated those out. What are the most common expenses you're seeing people are running into in their first year of business that are significant? Tawanda, you want to tell us about that?
The most with the pandemic, I can't say rent, right? Because a lot of people are online these days. But post pandemic, I have helped quite a few companies go from storefront to online. And what does that look like? So those are additional expenses, but different expenses, right? They're saving a lot of money and able to increase their inventories because of that. So now it's just it takes someone that can build a great website for them and utilizing that space. A lot of them did not accept credit cards in the past, but now they do because they have an online presence. So what does that look like? Some of them have expanded their retail and doing drop ship. So those things vary. It just depends on the client. But I think for the most part, prior to the pandemic happening, it was rental fees that was attached to a lot of that.
Yeah, so that's where that pro forma comes in, where you're listing out all those different expenses so that you can kind of track them.
Yeah.
I think one thing people underestimate is, they think, oh, I can start a business and maybe it's a consulting or low cost type business. And so I won't have a lot of expenses. And then tax time comes and they have to pay taxes. Can you talk a little bit about what you see? What should people plan for when it comes to taxes? What percentage should they put away just to make sure they're covered?
Yes, and this can depend on your entity type. I think if you're just starting out and you're just going to be a sole proprietor, even if you are an LLC, it's still going to get reported on what's called your Schedule C on your personal tax return. And again, this can depend on what sort of other income you have. If you're married and your spouse has income, what tax bracket you're in. The very generic percentage I give people is 25% to save for taxes. If assuming you're in a state that pays income tax, Minnesota is one. So between federal and state, I would say about 25%. Because you also have to consider if you are just a sole proprietor, you now pay what we like to call self-employment tax. So if you're not familiar with that is, so think of when you have a W-2 job. You get your gross pay of $2,000 and then you have all these little things deducted from it and then you take home, what's left. Well, what those amounts are is your Social Security, which is 6.2%, and your Medicare, which is 1.45%. That gets deducted from your paycheck. Your employer also has to match those exact dollars. So when you're let's say you want to hire someone and you're going to give them a salary of $50,000. Well, it's not just $50,000 out of your pocket. It's $50,000 plus payroll taxes, which can be about 10% between FICA taxes and unemployment. But going back to how much you should save individually, that's because now you are paying both sides. You're the employee and you're the employer. So you have to pay both sides of the Social Security and Medicare taxes on top of what your federal and state tax liability is going to be.
Kayla, when you were talking about that 25% figure, and this is going to tie into some of the conversation happening in the chat right now, with understanding, well, what is that 25% being assessed to? Sorry if I missed this, but is that 25% of all revenue dollars or net revenue dollars after taxes?
Yes.
After expenses.
Yeah, net income.
Okay.
So let's say you bring in $10,000, your expenses were $3,000 and you have $7,000 left over. That's what you would be taxed on.
Mm-hmm.
Yeah.
So going just high level on how to look at these things and balance sheets and everything else, people hear about the words revenue, they hear about profit, they hear about expenses. What does that all mean? $1 million company might have a revenue of $1 million, and that sounds fancy and that sounds great, but their profit could be $2,000 because their expenses are so high. So profit comes after. We have revenue at the top. That is all the sales, all the dollars your business brings in. So if you bring in $10,000 of selling product, that's your revenue. Then you have your expenses. Let's say in this example, your expenses were $3,000. So now your net revenue is $7,000. That's what gets taxed. And so that's what's Kayla saying. When you figure out that number, your net, put 25% aside in a tax account. I know Kayla and I have read the same book. It's called Profit First. I'll put a link to it. It is amazing. I don't know if anyone else has heard it too, but I use it for our own business. I tell all of our clients to utilize it. It helps with accounting and bucketing your business dollars appropriately. So every time we have revenue come in for our business, we automatically take a percentage and put it in a separate checking account that's labeled taxes. So every time we have to pay taxes, the money's already there. I don't have to think twice about it. I don't have to try to go through and figure out, okay, where am I going to take it from? How I've already set it aside. So it's like the envelope system that our parents grew up with, but you're applying it to your business and using bank accounts. So I'll put a link for the book, but it is incredible and life-changing for your business because this is what you utilize to know, can I make that extra expense? Can I hire someone? Do I have enough money? Can I give myself a pay raise? Which most of the time the answer is yes, we all deserve pay raises. And I think we don't give each other enough pay raises so often. But the book has been extremely helpful for our business and the businesses that we work with as well.
That sounds great. And it does tie to a question that came up about, where can people go? Where would you encourage them to go if they want to learn more about profit and loss statements, balance sheets, things for people who maybe have been in business for 5 to 10 years, and they're still kind of trying to figure out, what's the best way to keep, how much cash do I need to keep on hand? How do I manage that? And at what point do I need to go out and get somebody to help me? Because, it's always a tension when you're not making very much money and you're not even sure you can give yourself a raise. The idea of going out and hiring people to be help you with this is really challenging. So what would you advise them? Any of you? Wanda, you want to start?
Yeah, well, because I don't work in a financial world, right? I just, help draw financial plans or projections for a company. I do advise them to seek an accountant or talk to their personal bankers. I do try to provide them a lot of free resources within the community as well as online, including the SBA and organizations like that to help with the education when it comes to, what that looks like for them in their business.
Mm-hmm. Yeah, I think that's wise. And in the Small Business Administration and their small business development centers here in town, they have a lot of free resources that people can get advice from. And they do work with businesses that have been around for a while as well. And we have SCORE, one of our partners. Thank you, Jamie. One of our partners, SCORE, is also a group that would be happy to sit down with people and help them with those documents consistently. So,
yeah. But even for the personal credit, I would also recommend that individuals within a community look at the community education that's available. I do believe that they offer a lot of personal financial literacy that's worth taking a course on. That could be a week or a few hours even.
Mm-hmm. Yeah, and I feel like I should put a plug in. So we have a graduate certificate in entrepreneurship, and one of the classes is entrepreneurial finance, where we go through all of this stuff on a deep dive. So if you get to a point where you're like, yeah, like Wanda, I'm going back to school. I'm going to get that extra degree. Go for it and get the certificate. So I think there are resources. I think it's important, first and foremost, to direct people to the free ones so that they can maximize those free resources. So that is SCORE, the Small Business Development Center. Workforce Development sometimes has resources as well, and those can help. And then at some point, they probably need to go find that accountant that we keep hearing about. So Kayla, talk to us about when you see it most important for an entrepreneur to do that.
To hire an accountant or to just understand their financials more?
Well, both, I think. Right?
Yes. So a lot of people, I think a lot of people try and do taxes on their own to start because they think, oh, I don't want to pay the few $100s to an accountant. I can do this myself. Well, I always think about, it's just outsourcing something, right? Like I could cut my own hair, but it might not be pretty. So I will pay someone to do that. I could probably figure out how to change my oil, but I think I'll just spend the $40, wait 45 minutes and, be done. And the things that you might miss out on for, say, tax deductions, or you're going to be paying too much in, some people don't think certain things are deductible, so they're missing expenses. So now they're paying more in tax. So all of those things you might be missing so much that if you would have just paid someone a couple $100s to help you, you could save money in the long run, which I don't think people, most people just think, oh, I'm spending money, right? But you don't necessarily think about the other side of what you could be saving. And then, yeah, I love financial statements, profit and loss, balance sheets, walking through all of those, because they can be very confusing. And I think a lot of people only think of an income statement, what money came in, what money went out. what's left over. You know, they don't think about this lovely balance sheet that it all ties together. You know, what is sitting in your accounts payable? What are bills out there that you have to pay, but they haven't hit your bank account? So it looks like you've made all this money, but if you have a whole bunch of bills that you're behind on, that's an issue. Or maybe it looks like you're not bringing in that much revenue and you can't quite figure out why. Well, maybe you have a whole bunch sitting in accounts receivable. You know, maybe you have a customer that just hasn't paid you for whatever reason. You need to be following up with them. And you know, what are your assets? How much money do you have sitting in your bank accounts? What is your debt? You know, did you use loans or credit cards to get started, and how much is that? And then what equity do you have, right? Like, the whole idea of owning a business is that you can build your own wealth. And so every year that you make money, you are building equity into that business. And that is also something I don't think people necessarily think about. They just think, oh, I made all this money and now I don't necessarily know what that means or what to do with it.
Mm-hmm. So
Yeah.
is there a simple tool that you can point people to that can help them classify their expenses throughout the year?
Yeah, the main thing that I use and that I encourage clients to use would be QuickBooks. It's relatively inexpensive and it can break down. You can link it directly to your bank accounts. You hit an update button, all your transactions flow in. You just categorize it to say, okay, this was the vendor. You know, I went to Staples and I bought office supplies. Just making sure that it all gets categorized correctly is very important. I think if you just do a little bit of research, or if you just want some basic training, you know, sitting down with someone and going through how do I do this better? I do that for clients as well. If they can't afford to pay someone to keep up with it every single month, but maybe they have the time, right? Because I totally understand building your business and keeping your overhead expenses low as long as you can, until it no longer makes sense of, okay, now this is taking me 3 hours a month to do this, and it's costing me how much, that much time. Whereas I could pay you, $100 for whatever this work is going to be, while I'm out generating $300. Well, now I'm profiting $200. So now it makes sense to outsource that. So just thinking that way as well. But so yes, if you don't want to, that's relatively inexpensive. QuickBooks is a great tool to categorize all of that. And then you can run reports in there too.
Yeah. So there's been some great conversation in the chat. Go ahead, Tawanda.
No, I was actually just going to mention, for me, at least the clients that I have, I always recommend that they seek accountants out before they start. You know, we have all these professionals out here for a reason that do certain things, from attorneys, accountants, and I know that it's so easy to say that we want to cut the cost with a lot of things. But some things I do highly advise. These are things that we don't want to cut the cost. You know, for example, in the very early stages when you're trying to decide what type of entity to start, right? I'm not an attorney, so I can't advise you on that. So this is the reason why you need to talk to an attorney. Even if it's for an initial, free consultation, it's worth having that call. The same with the accountant as well. So I do recommend that they do talk to these professionals prior to starting.
Yeah, that's good advice.
One piece of advice that I had gotten when we first started was, why should anyone take you seriously as a professional if you don't take yourself and your business seriously and as a professional? As a business owner, the things that you aren't a professional or expert in should absolutely be outsourced. Yes, we all have our limitations in the beginning. We did too. I am very much ingrained in finance and tax planning and all of that. I have had a lot of expertise along the years, but I still have hired an accountant because I'm like, that is not what I'm offering to clients. That is not where I want to spend my time. And I want to make sure it's done right. So yes, Kayla is talking about the value of, the things that you miss, but you cannot underestimate the value of the time that you are giving to your accountant, and you're giving to your financial planner, and you're giving to your business expert about giving you time to work on the thing that you're really good at. So get your team of experts behind you to support you and lift your business up so that you can focus on the thing that ultimately you're good at and you've been kind of dreaming and waiting to launch.
Absolutely.
So one of the questions that had come in was about overhead and how do you decide how much overhead to take on? Does anybody want to speak to that?
Well, the more overhead you take on, I think the more revenue you're going to have to generate, right? I mean, A plus B equals C. It's pretty much that simple. And the reason why you want to be as lean as possible in the beginning is because you want to start paying yourself as quick as possible. We don't open up businesses so that we can run nonprofits. We do it so that we can pay ourselves and make money. I mean, ultimately, that's the goal of what you're trying to do while providing a service or offering to the community. And so, yes, you need to be lean in the beginning. I think COVID has been really helpful to get people to realize, hey, maybe I don't need an office space. Like, I don't think a lot of people actually took the time to think twice about those kind of expenses until COVID happened. So it's been really neat to see that way. I know there was a question too about like how much of a runway should I have in my business savings if I'm an established business. I would say you do need to look at your expenses, and it depends on your clientele or how revenue is coming in. For example, if you provide some sort of service, maybe you're in technology and you have a huge whale of a client that's bringing in maybe 40 to 50% of your overall revenue, then you should have a lot of cash on hand, because if you lose that client, things are going to be quite devastating. Like for instance, how our business works is we charge essentially very similar rates for all of our clients. So if we lose one client, we're going to be okay because we have so many other clients. So it really just depends on how your business is going and the odds of something traumatic happening. What impact and how long can your business stay afloat? And again, the other part of it too is making sure, well, if this happened with my business, how am I going to stay afloat? How does that impact my personal and household as well? So you always have to be evaluating the gap there, and looking at where the revenue is coming in and how it is impacted should something drop off.
Mm-hmm. So I'm going to do something here. I want to pull in Heather Donovan from the audience for a moment. Heather, we keep hearing, Tawanda has mentioned several times the value of having a personal banker or someone you know, a banker. Can you kind of give us here's what the value is and when people should be considering that? Putting you on the spot, I know.
I would say it's always nice to consult with your local banker. Just they have lots of connections with different people like Natalie and different accountants to reach out to, but I like to look at their business plan and walk through it with them. And if they have questions about financial statements and things like that, I can give them upper level understanding of that and, maybe give them suggestions of, what they need to be looking for. So it's just another resource for people to go to.
Mm-hmm. And I would imagine having a relationship prior to asking for any kind of loan for the business is helpful.
Exactly.
Yeah. Well, thank you. And thanks for letting me put you on the spot like that.
I'm a quick dial in.
I appreciate that. So I guess as we're starting, believe it or not, we're already starting to come towards the end. I know one of the things that I want to circle back to, and if there's anything in that, if there's resource lists, if people can throw those in the chat, we have so many resources available to us just from the people who are on this call, who are speaking, just to be able to follow up with questions that they have. But Natalie said something, and Tawanda, I wanted to ask you this question. How do you advise people to figure out how to set their prices?
I think that's a good question, and I think it depends on the market that they're in. I guess I always compare. I advise my clients to compare what's currently in the market right now as a price starting point. But it just depends on the market. For example, I'll say something like arts and craft. That's always one of those areas that, a lot of individuals have a specialty, and then they lead that craft to a business. And then they always come, how do I price this? So I tell them start with what's online, what's on Etsy, what's at the local stores, just to kind of get a price point and start from there. But I always, let them know that they need to consider what are they paying themselves as an hourly rate to do the service or make the product. So they have to take that in consideration, the price of the item itself, and all the different things that's involved in that to come up with that price. And then also, you want to add to that so that you can have your profit. But I think the biggest thing is just starting off with what's currently in the market and going from there, and what makes sense to your clients. Is it something that you would pay for at that rate?
Right.
Yeah.
Yeah. So that ties to cost of goods sold, right? One of those fancy terms that not everybody is really understanding what goes into it, but it's really how much is it costing you to make the product before you try to sell it. And if you're not selling it for enough of a profit, you're not paying yourself, to Natalie's point, right? But I think those conversations are hard. Go ahead.
The other thing that I wanted to add to that too is when you first start off, you have no brand loyalty, you have no brand recognition, you're new. And so the best way to get out there is to lowball. And essentially that's how you get noticed. Like think of Netflix. Do you guys remember the days when Netflix was like $7.99? Now I look at it, I'm like, why? It's $19. I mean, that's not that much money, but at the same time, that's over 100% increase in prices. But I'm still going to pay that $19 because now Netflix has the brand recognition. I know what to rely on, but you have all these other channels coming in at $5.99. So it works no differently than whatever you are selling. You have no brand recognition, so you have to attract clients some way or another. And then once you have that brand recognition, you are quite valuable, and make sure you're pricing your services or your product accordingly.
Yeah.
I can agree with that, Natalie, but that's something that I would think that you have to be very careful with. And the reason why I say that is because you can start off lowballing yourself just to get that brand recognition, but it can be very, very hard to drive the prices up once you set that price for your consumers. So, and Netflix is a great example of that. But just trying to come down a little bit to most of the clients, at least that I work with. I don't want to say that they don't see themselves growing as big as a Netflix, but big enough to be well off. I'll say that, but. I do think that that's something that individuals need to be very careful with, to lowball themselves and then drive the prices up, because that can be a challenge too.
Yeah, and another thing that I'll throw out there is, and again, this is going to depend on what you're selling. But if you, and we all have influence, right? We all know people. We all have people that can, share something on Facebook or Instagram, or share a testimony. Maybe you're getting started and you have created a program, a workbook, something like that for, let's say, I don't know. And so you want to, maybe you can reach out to 5 people that you think would really benefit from your product. You can say, hey, this is what, my dream is, this is what my goal is. I'm wondering if you can help me get there. Would you truly do this program, for example? I will give it to you for free. I want your honest feedback. And so that way you can continue to make tweaks and make sure that it's good and providing the service that you want to deliver. And then can they write you a great testimony for your website? And can they, share to all of their friends, their 500 friends, hey, this has really helped me. Perhaps it might benefit you or someone that you know. I mean, a huge way that my business has been built over the number of years is through word of mouth. That is the biggest source of our growth. I know it's probably shocking. I have 0 social media for my business. It's all been word of mouth. And so anything that you can just continue, just get creative, think of different ways that you can get your product or service out there that other people can help share as well. Yeah, and then it's even hard personally to try and figure out, well, what should my rates be, and are they too much, or are they low enough, and am I in the market? But I always advocate for women to charge what is fair and what is reasonable, right? I think it's so easy for us to just say, oh, well, you know, we can lowball it, and we can just be at this low rate, and or I'll give you a discount, or you're my friend, or you know, and I am 100% guilty of doing all of those things. But I always like, just, you know, I have to project it out to others, so that way it also comes back to me and remind myself. But I'm also a big advocate for charging what you're worth, and you just have to put it out there. For me, it's very uncomfortable sometimes, especially when you're raising rates. Like, I now have more overhead, so that's got to come from somewhere, right? And sometimes, yeah, it's uncomfortable, and you're gonna have people that balk at it, and you just kind of have to roll with it. But yeah, that's a good thing that Natalie was saying earlier of how many clients do you have and what wealth are they bringing in. For me, you know, if one client walks out the door, I've got 5 more coming in, so it's going to be okay. Yeah,
thank you. So ladies, you guys gave a great perspective, and this hour has kind of flown by. I'm going to leave with a little plug of my own, which is that I believe that if you don't value your services correctly, you're actually undercutting your peers. And so that's not fair to them either. So while you do have to build your reputation to be able to command top dollar, that starting at a fair market value keeps you from undercutting other people in your same industry, which won't lead to great relationships if you do. So, well, thank you so much. If you guys don't mind throwing something in the chat so that people can use it as a resource, that would be great. I'm going to also go ahead and put it in the note for the next meeting, the Eventbrite link, if you want to register for our next meeting. I want to thank everybody for coming and starting their day with us. I appreciate our speakers so much. They do this for free, and I am quite grateful. So thank you, everyone. I just put that link in the chat. I think Natalie's put her info in. Wanda, did you put yours in, or you're good? Excellent. All right. Thank you, ladies, for coming today and for joining us. It's been a pleasure. You guys have a great day.
thanks everyone.
Everyone.
Thank you so much.